Hello, this is Cryptolyze. I hope you are well. This Saturday, December 2023. We meet today to do our weekly, which is not going to be a weekly like the others because the goal of this show is really to come back to 2023 and to project on 2024. The first part will be macro, the second part will be crypto. And it's the preparation of tomorrow's video, Sunday, 24 December, which will be my gift in which we will really come back to the pure narratives for the year 2024 and 2025 overall, which is important to go look for the next bull run, for the bull run that is coming, and it starts right away. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress. So we are going to start our reflection on macroeconomics on this year 2023 and this year 2024. So in terms of macroeconomics, it is true that 2023 was still quite exceptional, in which indeed we had a big acceleration. We started at the time on the S&P 500 to 3,800 to end on a new 88th. We closed it at the close of the week, but that doesn't prevent us from looking for liquidity on the future contract above 4,810, therefore very important in the economy. American. And if you remember at the time at the beginning of 2023, at the end of 2022, I told you that the increase in interest rates, we were going to move towards the 5.5 and that was going to be the final rate, and that this is exactly what happened. And I also explained to you throughout the first part of this presentation that the economy was much more resilient than expected, and that certainly soft learning was going to go very well in the second part of 2023. I started to have a little speech. A little darker and a little more harmful on the American economy, which means yes, it was more positive. But the current boom in the market was still very, very strong, and particularly in this last phase of acceleration, which is the phase from October 2023. Clearly, in fact, this last acceleration that we experienced is something that we have experienced very, very little in the history of the S&P 500, and that, in fact, raises a lot of questions. Questions: has the fundamental changed? Is that inflation has changed? Has monetary dynamics changed? I want to tell you not necessarily. The only thing that began to take place was more or less the validation that there was no increase and even a possible decrease in 2024 in interest rates. And when we look a little at the pricing of the market currently in relation to this upward acceleration, and especially to what the market anticipates in terms of revisions, we still see a lot of things that are complicated. We are going to go back directly to the CME group to recover the probabilities, and we see that we have a decline, a real break in the rates which is very rapid. We are talking directly about March. There are still 20 people. 15 people think it will be in January, but we are already talking about March 75. People see a decrease which is enormous by 25 points, and so on. We see that the decrease is accelerating for 50 people at the end of the year 2024. We are around 375, and when we go to other pricing and anticipation tools, we see that we is still below, so we have a market which is pricing here. Establishment of the Fed, which would completely turn around, and which would break precisely behind its policy of increasing rates, and which would do as quickly as the policy as the increase in its policy of, so that means that we would go down as quickly as the speed at which we climbed. Something that is quite extraordinary is the speed at which we rose, and it is interesting that we rose so quickly that as a result the economy did not break, and I am not sure that the economy has managed to really feel the current effect of the rate increase, although it is certain that it is diluted in the economy. It's a bit like when you tear off a bandage. You say you have to go fast and hard so as not to feel the pain too much. Whether it happened that way, I don't know. Clearly, I do not have the capacity to be able to determine it. In any case, I think that we do not have the figures either. But what is interesting to see is when we look here at the yielding of Treasury bonds American in 10 years, which is a bit of a reference, we see the interest rates which are found here in the curve, which is clearer. We see that there is in fact a correlation, that we indeed have a fall effective since we had a stabilization, and especially here in October 2023. The reflection by saying, okay, that implies that the rates will decrease because the dialogue finally, in any case, the discourse of the Fed has already changed. We have gone from potentially we are going to make an increase to we know that we are not going to make an increase to we are going to make a decrease in 2024. Okay, well, in any case, the reflection and discussion have begun, and what is interesting is that already at the level of the Fed, we have several other members of the Fed who made a big mea culpa in relation to Jerome Powell's speech. But nevertheless, we had an overreaction of the market, and this overreaction of the market is also catalyzed by the fall in 10-year bond rates, which is very strong. While in concrete terms the rates have not moved, we have not yet started this famous pivot. But we already have a reaction from the market, and a reaction here from American bonds. What is also interesting to see is that we necessarily have a correlation by dollars. Necessarily that we have U.S. bond rates which fall. This implies that we have the price of bonds which rises, and that underlies. We also expect that we have a departure from dollars to potentially look for bonds that are a little more interesting, although we are still almost at the 4. Okay, we are still in very high rates and therefore very interesting. And this is where we must keep this in mind in relation to the reflections that we will have later on BTC and on the arrival of ETFs, because that implies that it will play a huge role. If we remain at a level which is very high, implied above the 3 with inflation which continues to decrease, there is not necessarily any interest in seeking risk to obtain return. We will discuss afterwards. But when we continue to think about this and really ask ourselves the questions, are we going to have a continuation of the bond decline? Namely that in 2024 we must not forget 2 things. Is that 1, we are going to have the political part. So we have the American elections. So it is a form of instability. The market will react in relation to this possibility of instability. And secondly, we have the validation of the potential soft landing of the Fed. Okay, generally it's the same case. And the 2, instability and soft landing, it's complicated to put together, so potentially it's going to be something that will be a little more shaken than expected, at least than what the markets are hoping for. However, when we look here at the distribution of the curve, which is generally the rate on the 2 years, therefore the profitable rate of the 2 years on American Treasury bonds, less from which I subtract inflation, and that gives us, does the real rate. What is the real rate? That's what the Fed pays me versus what inflation takes from me. And we see that we are in a rate that is positive. That means that just the fact of holding 2-year American Treasury bonds protects me, more than protects, even from inflation. So that means I earn a free return of 1.2 by holding U.S. 2-year bonds. So in addition, it's 2 years, and then if I do 3 months, well, overall, we always stay above 0, and when we are above 0, it means that I get paid without taking any risk. And that is very important because it means that I have a free return, which is given in addition to inflation, and these returns are relatively important. And that also implies that we have a part of liquidity which will remain in American Treasury bonds as long as we do not have this part which will return, or which will approach 0. As long as we have no interest in seeking risk on stocks and cryptos. Understand that the arrival of ETFs, spot BTC, will be a way to build compound products in which the volatile part will be the cryptos. We're going to discuss it in a few moments because it's really very important. We are going to come back just once again to the dollar in which we are in a downward trend. And what will be interesting to see is whether we are going to hold this level of the $100 here of the 100 unit. Therefore, dollars versus baskets of currencies. Are we going to be able to hold this part there? If we are not able to hold, that implies that behind us we have the American bond rate, which will sink, and therefore a lack of interest in the bond market from foreigners, and therefore a departure of capital, potentially towards other structures and other obligations. And there we will have a considerable signal of the decline in American bonds. And so that means that here something which will be lasting, re-entering a search for risk at the level of asset managers to be able to produce the percentages for their clients. So here we really have, in fact, an element which is a trigger, where we know where we are going. We know 2024 at the macro level, which is important to check, it will be one, is that the American economy will hold on to the impact of the increase in rates which was carried out in 2023. Is the drop in rates really going to be as aggressive as that if we have inflation which remains stagnant, at knowing that we have oil which is still very low currently and which risks increasing again? So we know that we has inflation vectors where it could be more complicated. But all in all, we are rather resilient in terms of the American economy. Of course, not the entire American economy. We don't talk a lot about tech. We're going to talk a lot here about artificial intelligence, but when we talk about tech, I think it's also important to talk about blockchain because it's one of the important American elements in which we still have a lot of things happening. 2024 will be for me, if we are in between tech, between blockchain, between crypto and macroeconomics, it will be regulation, okay? Understand that the fact that we are announcing and that there is a lot of news around ETFs is not nothing. It is really a crucial element of accessibility to crypto and acceptance of crypto BTC, but it is the gateway to the rest in the American market. So yes, it's not going to be done that easily. Don't think that it's going to be really simple when we see what happened. For example, with Nexo, in which in 2023 we had enormous pressure at the level of Nexo, while overall, they escaped relatively unscathed, and there is no problem on that front. We had Binance, which ate a big cartridge in which globally now Binance belongs to the Americans more or less, even if they do not have the right to exercise. On American soil, this is what is interesting. It implies that it is an exchange which is the right to exercise everywhere, except everywhere everything is relative, everywhere except on American territory, and which is under American supervision. Good, very interesting, when even as it works, we have the USDT, which is behind it so as not to get hit by the Americans. And therefore, this implies that we risk having a lot more compliant OFAC if you follow the daily. You completely understand where I'm going with this. It means that the Americans are regulating without regulating. And that's interesting is that precisely all the laws around crypto that they are trying to pass elsewhere since 2023 do not pass or have much more difficulty passing because behind them they do not need it. They do what they are used to doing that implies, come on, settle down. It's well, you are well installed. Okay, well then now you don't have. Didn't do that correctly, didn't do that correctly, didn't do that correctly. Take out the checkbook. And overall, if we can retrieve additional information, we're good. That's exactly what we see happening now. And it's really, really interesting to see the way in which the American economy reacted to this. The regulations react to this. You should also know that the different institutions such as the SEC and any other institution will receive a percentage of what they are capable of bringing back. So obviously there is also a very strong interest. So what's interesting to see is that on 2024 we will have regulations. It's a bit obligatory. We know we have to go through a regulatory phase when we arrive at the end of the 2020 year 4, and we also have elections behind us. This is where we are going to try to pass the worst laws so that there is little chance that we will pass in the next mandate. So at that moment we pass as many things as possible which are antithetical to the voters, and in a way, to be able to do it. So we will have to really monitor this aspect. But once again, there is not necessarily a need. Look at what has been done and what the SEC is doing now. There is a set of laws that are being made. We have judgments that make it possible to validate or not whether the SEC is in the right place, and in fact it works like this. Is it a good functioning for the explosion of an economy? I want to tell you no. But is that what they currently wish? Is this what the Americans want to have, the blockchain which flourishes economically in their country? This is the big question. Currently, I am not sure, and I think that thinking the opposite is not understanding how it works for me. We are more in a form of manipulation of the technology which is arriving in order to be able to get our hands on it, which is rather usual and which has worked for more than 60 years. So it does not, there is none reason to stop there. So we're just going to come back to ETFs again because it's very important when we're talking about BTC. ETFs, you must understand that they are a financial tool that allows institutions to easily gain exposure to Bitcoin. For what? Because first of all, buying Bitcoin means that we must be able to manage them. There are a few institutions that allow you to do this. I talked to you about them quickly, like Fireblock. But that doesn't mean it's still complicated, and that means that we have to explain as a bank, for example, that we hold BTC and that there is a fluctuation. It's very complicated, whereas explaining that you hold an ETF, which is based on BTC, so the ETF is a part of a company overall, that's it, and therefore it's much simpler to manage. It's also much simpler to invest and defend with its administration. That's why the ETF had a real interest. And this interest is the opening of crypto assets. So we're going to talk about BTC and ETH, but it is the opening of crypto assets to financial tools such as ETFs to be able to build and integrate these ETFs into other financial products, which are much more complex, which are what we call compound products, in which we will potentially have ETFs. We can have shares, we can have options. There has lots of things that can be integrated into a complex product, and that also implies that we could see the birth and integration of these products in long-term investment funds, which would be characterized in the long term by an injection of liquidity into the cryptosphere. So, that's where it's interesting to see. It's the notion of liquidity injection. Remember what I told you earlier. Here, you don't necessarily need to take risk to get returns. This is what I showed you in this curve. Here, if I don't find it otherwise not, it's because we don't need to look for risk. What is the point for an institution to heavily expose itself to BTC, or even a little to BTC to take risk? Much more risk with actions in an area that we do not know when we have performance for free. So that's where the notion of liquidity injection, I think it's going to be real. I think it's going to be sustainable. But I don't think it's going to be instantaneous. We will have a strong speculative reaction to the announcement of validation of these ETFs because we know that they will be validated. The big question will be when, but we will not in fact be in something that will be really explosive in terms of liquidity, and it will happen little by little. And that, for me, is a characterization. So we're going to do that. It's going to be interesting on BTC. That means that I'm always in favor of buying the rumor, sell the news on ETFs. And on that, you go understand a little bit as we go along, because we are still in areas which are very important, in which when we look at the bearish movement that we have experienced, we see that this bullish acceleration that we are experiencing is between the 618 and 796 when we are in logarithmic. When we have such a distant vision and such a high time frame, it is interesting to use the logarithmic, and we see that we are in what I call bear time. So bear time is quite simple. It's where all the bears must position themselves by saying, this is the last resistance. If we break this part, it actually implies that we break the 786. It's the classic Fibonacci retracement. That's why I told you that the level of 5152 was really very, very important. Like the level of 48,000, we really have these two levels in which if we break and consolidate above that, it implies that we are in a cycle which will be different from the rest. On the other hand here, that means that we will have downward pressure and profit-taking, which will be significant. When we look at what is happening at ARK Invest, yes, there are phases of profit-taking, but that is rather logical. Okay, when we actually know the upward acceleration that we experience there, at some point we have to validate the profits. In any case, what remains most likely for me would be to have a sell the news, to have the market breathe, even if it means having a temporary upward acceleration following the validation of the ETFs. If it happens in January somewhere, that could be that. And then a retracement and a breath that could take a little bit of time to happen overall. On here, this retest area before consolidating and having the halving here. And then start to rise again at the end of 2024 with also, why not the end of the elections and the end of American instability? And therefore behind when we say end of instability, it also means return of risk-taking. The more instability we have, the less risk we take. The more we have something that is coherent and stable, the more we will tend to seek risk to compensate for this political stability. And this is where, for me, we will have a real momentum which arrives when we hit the 0.5, therefore the 32,300, where we will have a buying opportunity which could go, why not low enough? But in all cases, we must not think that it will go lower. We must think in the form of a level, saying to ourselves, okay, if we ever get to that level, I am capable of reinvesting so much, and that is really important. And for me, that is fine to be the reflection of 2024. the reflection of 2023. It was here to hold and not to sell. All right? To really hold this whole phase here of upward acceleration, stabilization, reacceleration. All right? That was really the big challenge of 2023 and accumulating during this whole part. It was really the most complicated, I think. 2022 was about separating from one's positions. To enter into a mode in effect of DCA positioning, but really 2023. It was the fact of continuing to buy in a market which was accelerating upwards with a fear of going back lower and not telling oneself that obviously it's going to go down lower, so I'm not buying it. It's already too expensive and I won't buy it. And that was really the difficulty of 2023 during this whole period. A lot of people didn't succeed. So we had a lot of FOMO too. It's pretty classic. Now the reflection 2024. For me is not going to be in a notion of selling because I am not, for example, in the sales policy. I am here to prepare the bull run. And the bull run is not here a retracement acceleration. It's a breakout of the ATF, and behind it really is an injection of liquidity. It's not because we return to levels that are interesting that we are in a bull run. We just return to the level of January, February, March, April 2022 before Terra Luna. We're just coming back from where we were with Terra Luna, and that's really important, is that we're just coming back to areas that are normal to retest, and it's rather healthy and positive for the ecosystem. So there is another theory that comes into account and that we must monitor, which is that, yes, we have a lot of manipulation of news that revolves around ETFs a lot. Every time there is a call, we talk about it, etc., etc. So we are actually increasing the tension. It will be validated in January. It will be validated in March. As a reminder, we can very well refuse ARK Invest, resubmit ARK Invest, and validate everything in March. Although there, when we watch the different news, we says that it will potentially be really validated at the beginning of the year or even the end of the year. There is another theory which comes into account, which is the theory of BTC liquidity management. And that is important because that it is a hindrance compared to the theory that I give you and the probabilities that I give you. I'll explain why. This is the principle. I have already spoken to you about it. It is the notion of the liquidity and the availability of the number of BTC on the exchanges and the liquidity of the BTC in relation to the arrival of the halving. Obviously, when we arrive at the halving, we divide by 2 the number of BTC which are generated, but above all, what is important is that we have less and less BTC available for purchase on the exchanges and on the market in overall. Because we have an LTH supply which only raises this little blue curve that you see on this screen, I really invite you to look here at the rational root, who is the person who actually produces this type of graph, and it is someone who, in any case, has a thought which is a little particular, which is apart from the rest, and which I really like in his way of thinking. And when we actually see this blue curve, which represents those who are holding BTC overall over the long term, and we see that we arrived at levels which are the accumulation phases of 2015, something that we did not necessarily know in 2018, 2019. We didn't have these periods, really these huge peaks, so that means that people are holding BTC and not letting go. And that's really important. It means that we have a reduction in BTC emissions, and at the same time we have an increase in people who hold and do not sell their BTC. So that means that at some point we will potentially end up with more BTC or very few BTC for purchase and resale. And we remember that we are on a spot market. So that means that it is a market. It is a market which determines its price in relation to the last purchase order. And so obviously when we have very few items to sell, that means that we could very well have a speculative bubble which bursts at a totally aberrant speed because we have very little BTC present. And behind it we have a lot of liquidity. Or in any case we have liquidity which is injected, but which is higher compared to what we is capable of providing in terms of BTC trading volume, and indeed having a very strong valuation of Bitcoin. And this is where the two will actually confront each other. Are we going to have enough liquidity to drive this cycle? Or is this liquidity going to be much more controlled and much slower to actually be able to have something that is much smoother? And this is also where we will have to monitor this blue curve, this LTH supply, so I invite you to follow the rational route on Twitter in particular. If you want to have these graphs, even if I would present them to you regularly, that does not prevent it. It's really interesting and important to see whether we have a continuity of the holding which is carried out throughout this cycle, which is being prepared, or whether we are going to have a sell-off as we experienced in 2015, 2016, okay? Seen here in this acceleration phase, this whole acceleration phase was a sell-off. So are we going to be in this form of sell-off? At this point, that means that the BTCs, which have been held for a long time, will be sold and will make it possible to compensate for the demand and therefore the addition of liquidity, which will be carried out by ETFs and the construction of structured products. And I remain convinced that for 2024, we will not have a monumental injection of liquidity. It will happen little by little, because as usual, it is a part of risk management. We are on large institutional. We don't manage risk as if we were a retailer, as if we were pressing a button. It's not done that way. So concretely, to actually move forward in this vision. 2024. For me, the real bull run and the break will happen on Q3, Q4 2024. We will have a phase of lateralization or retracement following the ETF announcements, especially since you have to take into account that the fact that ETFs are arriving also means a lot of things. I'm not going to elaborate on them, but we can have paper ETFs. As we know about gold, if you're interested, tell me in the comments. I will certainly make a video where it will be a subject that I will discuss live, but it can also be a risk that we can have. And also the ETFs are financial tools, which are very often used to be short, therefore sold short. Therefore, a relatively strong selling pressure, which we could find on BTC, which could be a phase of manipulation, which we do not yet know, and it is same. Other people who think that. I'm very mixed about this, but I know that it's a risk that can happen, so I take it into consideration as usual, that's it. Also, something else, we have the notion of the halving, which is arriving, and in which we have the representation here that I am putting in green of the price of BTC. So, in relation to the hash rate, which continues to continually rise, that is to say that there are more and more people who are interested in mining, and when we arrive at halving, we must know that these miners will have their turnover divided by 2. And so this is going to be an area that is going to be very important to monitor, in which there I have updated with really the latest miners, the latest material that is available. So not all have that. Not all have very good deals. Electricity, and generally we are, I think, in a range which is high around 35,000, low range around here of 22,000, 20,000 maximum. Okay, so we are really in this zone here where it is the zone of profitability of miners, and therefore in relation to the existing difficulty, and therefore if we ever have to work in these zones, I think that it will be strongly defended by the miners, and therefore we will also have a sale of BTC, which will decrease. We will have no taking. Profit of the miners, because they will barely be profitable, so there will really be the union minimum which will be validated. We even have people who will disconnect, and therefore a hash rate which will decrease, and there we will have something which will stabilize. That's why I'm telling you that if we ever get to this area, we'll have to buy again. To consider that we are going to do everything right is not to prepare ourselves to be wrong. It is not to prepare ourselves for the possibility of going further down. What's going on in your head at that moment if you haven't prepared for this eventuality? Well, at that moment, you react on emotion. That's absolutely what we don't want. Next to it, we have the total market cap. The same which is in a rather classic representation. We are in a retest form, this capitalization has not yet really reached significant levels. We would really have to go here in the almost 2 trillion to match level where we are at the level of BTC. So that means that we also have a lot of altcoins which are waiting. And indeed, when we see, for example, the total 3, which is performing rather well, we are still very, very far away. As a reminder, we should go around 700 or even 800 to be on the BTC side. So we still have a possibility of acceleration in altcoins. And what is rather positive, understand that for 2024, if we ever indeed have a breakout at the level of BTC, altcoins will become expensive. And it is important to increase. It is important to have an increase in the capitalization of these altcoins to be able to absorb a -20 that we could have. You just have to be able to absorb that impact. A growing altcoin market cap is very positive, and will in any case allow us to be able to absorb if we ever find ourselves in a sell the news and perhaps a little stupid. For me, we are in this dynamic of preparing for the bull run, and which is positive. In fact, it is excessively positive. We're breathing now, whether we lateralize or continue to accelerate. All in all, it's the advent of the work we did on 2022 and 2023, and that's precisely the goal. This is one of the goals that we have been waiting for and that we have been aiming for some time, And the important thing is not to weaken on 2024 and to really accept the fact that in all cases, 2024, 2025 will be the year. Real bull run. In any case, that's what we're aiming for. That's what I'm personally aiming for. And this acceleration phase of bull run will have nothing to do with what you experience there. Understand that this is really something. It's a mini bull run, and use it to train yourself psychologically in the management of these types of emotions that you may not know if you have ever only been in a bear market. And it's important to train because when it happens, it will happen very strongly, and you will have to react. It will always be very short, very powerful, and that's where it's complicated to manage. I'm going to speaking upstream. This is what I regularly explain to you in my daily routines, or in my various training courses. And this is what I also explain at greater length in the training which is made available free of charge. In any case, I hope you liked this video. If so, don't forget to leave me a like and a comment. I wish you a very good Saturday, very good preparation for those late for the gifts. And we meet up precisely for my gift tomorrow, 24 December, where I make you a video mainly on the narratives not to be missed and understand that pre-all run, not bull run. It doesn't matter all in all. We are never too late from the moment we has the right strategy, and that's tomorrow.